Hey everyone, welcome to this episode of the Crypto Leviathan podcast. I'm your host Dalibor. This is Andrew. We have a very special guest today. Do you want to introduce yourself, Matt?
Yeah, sure, guys. My name's Matt Branch. Really excited to talk about the economics and everything you guys have to discuss about crypto. I'm really interested in that stuff. I'm not too big into it, but I'm always happy to talk about it and learn. So yeah.
You will be into it by the end of this show. I can guarantee you
Yeah,
that.
you guys will sell me on it for sure.
Oh,
I'm really,
absolutely.
I'm really open-minded with all this stuff though, for sure. Like I'm not a guy who says, no, get out of crypto, it's speculative and all this other stuff. But yeah, you guys will be able to sell me, I'm pretty sure.
Oh, absolutely. Well, you know how the naysayers are. We've been hearing like that crypto is going to go to zero or Bitcoin ever since we started mining. Even back
Oh
in
yeah.
2017, I've been hearing about it. Crypto is going to be worthless. So
So you started mining? I didn't know
no,
this. I
our
better.
business partner started mining in
Oh, okay.
2017.
Hmm.
But he was kind of like a hobby miner. He didn't have the business mindset that me and Andrew brought. When we brought in, we started scaling it like crazy.
Yeah.
So yeah, that's how it worked out. But yeah, like even during that time, and I would say like 2019-ish, it was
Hmm.
pretty rough. Like I was barely break even, or you're just breaking even. But
Hmm.
he was able to get through it. So
Yeah.
and on the other side now, everyone's wealthier because of it.
Yeah. Well, there's a lot of people probably selling off right now in crypto because all the news and everyone's actually that's with everything, stocks, everything. So it is what it is. It's just human nature.
It's getting close though, like kind of like other assets where like the components used for mining, which is mainly GPUs. If you're doing Ethereum mining, are you familiar with Ethereum mining?
I'm not familiar with a mining. I know what GPUs are. I know
Okay, so
educate me.
sure, definitely. So the each video card contributes what's called hash rate to the system. Hash rate is basically computational power, and
Okay.
the more computational power these graphics cards have contribute to the network, the higher percentage of reward you receive.
Okay.
So you get the best way to make money in crypto when mining is having the highest efficient mining equipment and that consumes the lowest amount of power. And that's generally the
Gotcha.
gist of it. So now going back to your original point is a lot of people, because it dropped so significantly, because they live in markets where electricity is very expensive, we've seen that they're fire sailing and they're getting good discounts now. The used market is still sticky. People are trying to get, February, March
Hmm.
pricing, but I'm sorry,
Yeah,
it's gone now. You can buy a brand new GPU for 950 under $1,000. So
that
it's
makes
an
a lot of
interesting
sense.
time. I'm seeing like some, long-term miners start buying again because they're looking at it, the ROIs are, 18 months, 16 months, which people are like, oh, that's still a great ROI, but people who just started like a year last year, they're used to ROIs
Hmm.
under a year.
Hmm.
So it's kind of like that disconnect right now where some people think it's very bad, some people think it's a great time to buy.
And like how many like do you have to buy a whole bunch to start, or like how many GPUs would you need to start like your own mining rig
Yeah,
or
absolutely. We did
anything?
a whole segment on that. So essentially, if you have a gaming computer, like a desktop, you can start
Yeah.
off with that. That's what I
Really?
recommend. Yeah. Like your payouts might take like a month or two longer because you don't have much equipment, but yeah, you can still make money off of it.
Yeah, that's how I started. So our business partner, I used to work with him and he was the IT guy. He used to talk to me about crypto all the time, but he would try to talk to everyone about crypto and
Yeah.
no one listens to him until one day he showed me his account. He was making like 3 grand a month from Ethereum, which was
Wow.
right. And he knew that I gamed. So I had a couple gaming PCs. He's like, just start mining with those. So what
Yeah.
I did was I turned on the mining client on my first gaming desktop, and then I bought 2 other gaming desktops that were on sale. Then I
Hmm.
started talking to Dalibor about it, and then we started buying massive amounts of graphics cards.
Damn. Where were you guys when I could have been doing this with you?
Well, you know
It's
what it
not too
was?
late.
Andrew was
Yeah.
messaging me about this, and I was looking into it. I'm like, why are we jumping on this? Yeah, that was initially when he told me.
Yeah. I I need to start. So I would have been in crypto. Like I do have some money, but not like I'm not like you guys at all. And I kind of invested on like what other people were doing, which is a terrible way, and I don't recommend to do that. But if I would have had more free time, because obviously I started my book of business like with life insurance. So you have to, like, if you're not 100% in on that, you're not going to be making sales, just because no one knows you, no one who knows who you are, especially if you're not with a big bank. So that's what I did. But if I would have had the opportunity, I used to have a gaming PC, I would have just started right there and then just got to know it, got familiar with it. And I had the capital, I still do, but not the, I don't know if the prices are like 1,000 for a GPU. I remember when I used to get them for like 700, like 3-4 years ago.
But the ones we're talking about are the optimal ones for
Yeah.
mining.
Okay.
You can
True.
have cheaper ones as well. But
That was
True.
we target for efficiency because we're long-term miners, right? But if you're just starting off, it doesn't matter what you choose as long as you can mine it.
So Dalibor, if you had a gaming PC, say in 2008 or 2009, whenever Bitcoin was first like released to the world, how much could you have mined with your regular at-home gaming desktop, say over a year?
When Bitcoin first came out, you could have made a couple hundred Bitcoin an hour because no one was doing it. But
Whoa.
the thing is, no one knew it was going to become like this. So
Yeah.
you're kind
Yeah.
of
Yeah.
mining and you're like, I don't know what I'm doing,
Yeah.
right?
Yeah. Yeah. That's
That's
crazy though.
So
That's crazy to think.
the guy who spent 30,000 Bitcoin on pizza, he probably mined that.
yeah.
Yeah. Yeah. I heard about that story. How tragic.
Did you see
Insane.
this? I posted the CNN interview one time on my story, and then you could see like the depressed look at his face when
I
he
saw
bought it.
Yeah. Yeah, that's terrible. I don't even know what I would do. I really wouldn't know what I would have done. Cause that took like, he bought the pizza and it would have like, that was way long ago, right? So that it would have took like 20 years until he realized the mistake, or how long? When did he do that? Like, do you know the year that he did that?
This was 2016-ish, I believe.
Oh, so
So
it was.
it was before this like previous bull market. Basically, he did. I was just like, man, terrible timing, you know.
Yeah, he would have like, would he be a billionaire?
He'd be a serious multi-millionaire. Would he be a billionaire? I don't think so. Because
No.
I was doing the calculations. Like the only people that are billionaires of Bitcoin are the ones who bought in like 2012, 2013, like the 3 cycles ago, right? Not 2 cycles.
Mm-hmm. Are you guys into stocks at all, or
I actually has been selling off my stock portfolio because I just don't
Yeah,
believe in it.
I know, and I'm in the same boat where I'm like, I want something. Well, I guess I'm not in the same boat because you guys still are in crypto and you still have your crypto investments, but I want to get into purely real estate. I don't want to have like the stock. Like I'm trying to get out of the stock market once I could sell off obviously at a good time. I might keep some, obviously, just because I bought, because I'm pretty sure Dan Crosby has never touched a stock in his life, right?
No, yeah, exactly. The reason why is it's kind of like I've realized it's hard to build wealth in the stock market, right?
Yeah.
It's you can't use leverage, which I think is like one of the biggest wealth creators, right? In our credit-based economy.
Yeah.
That's the way I describe it.
Yeah,
If you're not borrowing
exactly.
money, you're losing money, basically.
It's sad, and like that's exactly what the banks do to us. So that's exactly what I teach people too. Is like only use other people's money. If you're paying for something, use someone else's money. Like I don't believe in buying something straight up with cash, because then it's essentially dead to you, that money, what it could have done. So you're losing all the opportunity. So,
Well,
Do
and
you want
people,
to explain what you do?
oh, before
yeah,
it does that, I just want to get his opinion then. You're saying that you don't like paying for things up front, you'd rather borrow it or whatever. So I need to replace my AC. It's either
mhm.
$3,000 for a brand new one, or pay, let's just say $80 or $100 a month to rent it from Reliance. What's better?
Well, you have to run the numbers, but I would essentially say pay for it in smaller increments. Take it apart. Like what I'm about to say will make sense, okay? But you use someone else's money to pay for those small individual payments when you're paying it back throughout the months, instead of paying for it all up front. Because when you pay for it all up front, you lose what that big chunk of money could be doing for you later on.
So would the solution be here to say put it on a line of credit and then pay it off that way, or
there's another way? There's another way that's kind of less heard of, and I
okay?
could explain that. So what
right.
I would, so I have, my goal here, this is going to sound totally crazy to a lot of people, but you got to hear me out. And you probably heard me talk about this a little bit because they had me explain it at the event that we went to. But essentially, there's a thing that the banks do, and they use other people's money. When you put your money in a bank, they put that money to work and then they loan you out back that money. So what I do is I put my money into these life insurance contracts, and specifically dividend paying whole life insurance. So then my money is growing 24/7. Like I'm telling you 24/7, 365 days a year. Like if I wake up, my account will be up. It's cool to watch my money grow like that. So what you could do with these policies is actually leverage them.
Sorry to cut you off there, but can you explain to them why it goes up all the time? Because I think that's where people like get misconstrued. I think it's a scam.
Yeah. Okay. So it's the life insurance has a contractual guarantee that your death benefit has to equal your cash value has to equal your death benefit, because they have to eventually pay you out that death benefit, if that makes sense. So legally, they have to make sure you get your money. So they invest in very guaranteed assets. And it's kind of funny because the people who buy term insurance that don't build equity up in these policies just give your money to essentially the people who have these policies are building up equity. And so the life insurance company has their own pool of money. So it kind of creates their own private bank, and then pays out dividends to policyholders who are building up equity in their policies. And where were we? So, okay. Now getting back to your point with the if your AC breaks, Andrew, what I would do is take out a policy loan on my cash value. And essentially what you do, you keep your cash value growing, but you leverage it against and use it as collateral. And the life insurance company will literally pay you out a loan. And the crazy thing about this loan, you don't got to pay it back at any certain time. It's growing at 6%. The loan's at 4%. And the loan's always at under market. So like you can get your money cheaper. You can get someone else's money. You could have access to someone else's money at a cheaper rate than the banks can give you. So what you do, you take that money, and then obviously it will go right to your bank account. And then you do what you're going to do originally. You just added that extra step. So however you would have paid for that, you can do that, or you can get kind of technical with it and start paying back in increments. And you could take that big chunk of money that you were originally going to pay and use it for something else, like putting a down payment on a house, literally with whatever that could be, or an investment.
I have a question though. This loan that I take out on my life insurance, how do banks view it? So let's say I take out 100K from this policy, and will banks view that as debt that's going to lower my ability to qualify, or how does that work?
No. So they like that money is yours anyways, because that's in your cash value. They view it as part of your network or net worth, if that makes sense, because that's your money. It's just loaned out to you using the insurance company's money.
Got it. Okay.
Makes sense?
Yeah.
So, and the reason why people think this is a scam is because they're like, oh, it's too good to be true. But this won't change your life. This is a theory. This is how the wealthy get wealthier. They find ways to use other people's money. So whenever someone says, well, that's too good to be true, I'm like, okay, what do you think the banks are doing to you right now? Banks in 2019 in America owned $88 billion worth of life insurance. Which companies went up during a recession? The banks, by a lot. And it's because they owned these assets that they're able to leverage and literally create two sources of income for themselves.
That's exactly my point always, is like banks lend money. That's how they make money. The more credit they lend, the more prices go up, the more money's in the system. Like when me and Andrew, like we used to listen to Peter Schiff back in 2020. You probably know him. He's constantly railing against the system. And we made investments based on his advice that got us nowhere. So we're like, you know what? We're like, if we can't defeat the system, we're just going to play the system. It's worked out great when we started playing the system.
Yeah. And the system's always in your favor if you're on the right side, because they're not, I mean, the politicians are doing the same things that the banks are doing. They're going to always be doing the same things that are be on the right side to make them money. Right. So
I think the biggest problem is like the middle class is like taught that debt is bad. and stay away from it. But you'll pay down your mortgage, avoid credit
Shut
card
up.
debt.
Yeah.
I
I
mean,
know it's
there is certain debt you want to avoid. Credit
Mhm.
card debt, school loans, because you can't go bankrupt on them. I think that's one of the worst sources of debt. And every
Oh,
person before in like high school is taught to, go to
yeah.
university, take out these massive loans. That needs to change. We need to start
Mhm.
educating people about that.
You can go bankrupt on them. It just has to be after a certain amount of time that you've left school.
Yeah, but it's undue hardship. That's my
And
point.
doesn't it, and it transfers over. If you pass away, it just transfers over to your, like, it's not, it doesn't die with you. Like that tax gets transferred over,
It
right?
goes into your
That,
estate, and then like
yeah.
they take from your estate.
Yeah, that's crazy.
Yeah.
Eh? What was I gonna say? Oh, yeah. So funny enough, you mentioned that though. So I actually I was applying for OSAP because I'm going to college in the fall. Um, and it said, what are the four, because OSAP makes you do this whole information, make sure that you're actually listening to the questions, and they ask you these questions. And it says, what's the worst type of debt to have? And the two that I found funny was because it said credit card and then um, student debt. And I kind of laughed because I'm like, is there a both option? Because they're both trash. They're both terrible to have. Credit card debt is awful, and student debt is even worse, almost to a degree,
And
or the same value.
the only type of debt I like to own is debt that pays me. If the debt doesn't pay me, I don't own it. That's the way I say it.
Yeah, yeah, and but like yeah, like you're and something that's constantly building up, like real estate. Real estate's good debt. Real estate, like those people who do.
It can be bad debt though. Let's talk about that. But it is
Okay,
generally
yeah,
good debt.
yeah, because a lot of people like the just buy a home and they think, oh, this is appreciating asset, but their cash flow is going out the door every single month. So it's not a, yeah. Is that where you're going to go? Is that
Yeah,
where you're
exactly. If
Okay.
it's not cash flowing or at least break even, I think the property is not worth it.
Yeah. Okay. Yeah. And I agree. I totally agree. Yeah. So there's a crazy like statistic up there. So a renter versus a homeowner, a homeowner's net worth is well over 200,000 on average, and a renter is like 7,000 on average for net worth.
Are we surprised though?
No,
Like,
of course not. Of course not.
Think about this. A homeowner might be cash poor, but he's asset rich. A renter is cash poor and asset poor. So you have
Yeah,
nothing.
both.
Yeah.
Yeah. Yeah. You have literally nothing to your name, unfortunately. And a lot of people will find that uncomfortable, but that's temporary. A lot of people have to rent right now. Like that's okay, but have a long-term vision at least.
It's okay to rent because there's a bunch of people in Toronto I know that buy, for example, a ton of properties in Alberta, Edmonton, and Windsor, but they're still renting there, but they own a whole real estate portfolio that's supporting their rent. So it doesn't matter.
Exactly.
But
Yeah.
you have to structure your life in a way where you're not losing all your cash flow constantly,
Mm-hmm. Mm-hmm. And money doesn't have to be complicated. Write it down on paper. It's grade school math. Make it look, or not make it look, but make sure it adds up. Make sure the numbers add up. And life also happens. So, your AC breaks, some things happen like that. But just this whole making things complex in finance is just, I think, stupid. You should make it as simple as possible. Keep it simple, stupid. And just stop confusing people with all this crazy, not like blabber, really financial blabber. It doesn't have to be complicated, right?
Well, yeah, like I'm doing a roof this year and then I have a HELOC and I'm just gonna put in my HELOC and then they call it a day, amortize it over 25 years and forget about it.
Yeah. Yeah. And you wouldn't do that if you like, let's say if you were just renting the property, and let's say you had to pay for the roof somehow, which you wouldn't have to, but there's no way you'd ever be able to pull out equity in that home because you're renting. Vice versa. If you own no assets you could leverage against, you're screwed.
And people, like, we're in a bear market right now, so a lot of people are like, oh, real estate's a bad investment, we're going back to the 90s of 10 years of not appreciating.
Dude. Oh
and the important thing to realize is you might be right in the moment, right? You might be right in the next year, but long term you're always going to be wrong no matter what. Real estate over 20 years, you can't tell me anyone who's owned anything. You could have owned the crappiest house on Glengarry, and then it would have appreciated. So it doesn't really matter.
Yeah, like the whole investing's dangerous and take like don't take the risk. Like everyone, the same people who said Scott, he said he was in real estate. He got in 4 years, for 4 years. People were telling him, oh, the market's going to crash. The market's going to crash. It never did. And he was up 200%. So I just listened to what the guys who are winning are doing. And I never listened to the guys who don't have any evidence to back things up other than the news.
Like I bought a house last year, right? A single family home. It went up almost 250K at the peak. And now it's down maybe like 50K from the peak. Do I care? Honestly, I don't care whatsoever.
Yeah. Actually, oh yeah, go ahead, Andrew.
And people don't understand that, right? Where I'm like, I just don't care. It doesn't matter to me.
Yeah. But then there's also guys who are who go and check out a house and it's like it looks all nice and it's like all pretty looking. They're like, oh, I'm gonna buy it off because it looks good. And then it doesn't cash flow at all, and then they're screwed. And then they're actually screwed, and there's no cash flow there, and it's just But the thing is, you're still building up equity there if you did it right.
If you bought a house with zero cash flow, but you have a principal paid out of like $2,000, you're still making a ton of money, no matter what way you look at it.
Yeah, I don't know where I heard it, but like someone said like real estate could be really bad, but they might have been talking about what we were just talking about, like with most people's financial situations buying a home. But I just don't see how it's really hard to fail if you actually are trying to do well in real estate. Like it's hard. It's like one of those things where in the stock market, you throw your money into a penny stock, it's really easy to fail, or crypto, it's really easy to fail. But real estate, it's a hard asset. It's going to appreciate over time because you can't add more land to the earth. So the people who are hesitant to buy rental properties or start in real estate investing, I'm like, just get in now. And if you make a mistake, you'll learn from that mistake and just make sure it's like cash flowing decently.
The thing about real estate is if you hold it long enough, it's hard to lose. Like even if you make a mistake, let's say you bought a property, it's like, oh, I'm not really making, or I lost 20% since the peak.
Yeah.
Well, if I just hold it for 10 years, I'm probably going to make, 20%. So that's why, I mean, that's an extremely safe asset. Crypto, on the other hand, like depends on what you're doing. If you're mining, there's consistent cash flow every month. That's why me and Andrew love it. It's kind of like
awesome.
real estate. Like there's money coming in. At the peak, we were making $8,000 a month, which is crazy money. Yeah. And now we're somewhere in the 3K range, I think.
Peak, the absolute peak. I think it only lasted a day, but it was 20 grand a month. It was only a day because it fluctuates so much.
And
I need to talk to you guys more.
And that's the thing, right? It's like people are like, oh, the returns are inconsistent. Yeah, but if you average it out over a span of 3 to 4 years, you're making good money.
Yeah, and it's all gravy after that because you probably already made back your money from the money you spent, right?
We probably tripled or quadrupled our initial investment, and we didn't really reinvest much back after that.
And crypto is going to be around. I don't care what anyone says; it's going to be around. It's
the future. Like honestly, I think that adoption is going to slowly increase over time. We've seen some countries like El Salvador adopting it, others in the talks, and it's just because people are dissatisfied with their system, right? It's like, what do you have to be an investor to get ahead, right? It's like working a normal job, buying a house, trying to live a normal life. You're going to end up poor by the time you're retired. It's really unfortunate, right?
It's a failing system.
Yeah.
It's just a failing system. You have to adapt. I mean, I'm not saying you can't work hard. Don't quit your job. Like that's a terrible advice, but work hard and then create other, not go directly into a side hustle. I hate using that word, side hustle, but find something else while you're building up your side hustle. It's such a hip term now. Like I'm like, everyone.
Someone who flips sneakers on Kijiji, thinks they're a side hustling, but you know what? That's like, there's two levels. I view that's just like, making extra money on the side. Yeah. But if you're actually trying to side hustle, it's about building a business, right?
Yeah.
So that's where I draw the distinction.
Technically technically what I'm doing right now in life insurance and the infinite banking concept, technically it is like on the side. But since I was stupid, and don't make this mistake, guys, because there's going to be people who tell you quit your job if you don't like it. Quit. That was a terrible idea for me. So what I did, I kind of got cocky in a way because I'm like, well, if I'm doing one deal a month, I'm going to be making great money. Well, I quit my job and it was not easy. I thought posting on Instagram consistently will bring leads. No, you have to reach out to people. You will never like when you're selling your service, people won't trust a Instagram video or picture. They'll just think you're scamming because so many people run scams now. So that was a terrible idea. So technically right now what I'm doing is my side hustle, but it's the only thing I have. So I'm going all in. So there is goods and pros and cons to quitting your job and doing this. And it's going to get me where I want to go faster. But I was stupid and I quit my 9 to 5 when I should have kept it so I can invest quicker into real estate, if that makes sense.
Yeah, me and Andrew are in a similar boat. You know, it's like we both work full-time jobs, but we have very cushy salaries. So it's kind of like we're only going to quit if our salary is basically replaced or close to it. So, I mean, that's a pro and a con, right? When you're doing both, you'll have no time if you have a full-time job and doing side hustles. But if you fully devote yourself to a side hustle, high risk of failure, high risk, but you're going to get there faster if you know what you're doing.
Like no safety net. There's like no safety. But like at the end of the day, like too, you really can't like say to someone, oh, don't quit your job. Like if you genuinely hate your job, like it's good to maneuver and pivot if it makes sense. Like it has to be, you just think with logic. Like people don't think with enough logic nowadays. They rely on what they hear off social media and they don't relay it to what's actually going on in their life and what they need to have attention with inside their life. They're literally brainwashed almost. And I'm speaking for myself because I was at that moment, I was brainwashed. I'm like, I'll be fine. Nope, was not fine. It was scary. Like I'm like, I am like a failure right now. And that's kind of what pushed me to where I had to go, but it wasn't easy.
For me, it was like a moment. So I moved to Toronto after university to like start my first job. I remember like after a month of work, I came home, you know, was turning on the PS4, you know, about to play a game, and I'm like, what am I doing with my life? You know, I kind of got sick of 9 to 5, and a month in, I'm like, this is not for me. I don't want to be doing this forever.
Yeah.
And that's when me and Andrew actually started our first startup. He came to me in Toronto. We met up, and he's just like, why don't we do this? I'm like, yeah, why don't we? You know, it was just having the I would say the curiosity almost to like do something else. There's a different path in life, right? And like it is scary, right? When you're first starting off, we didn't know what the hell we were doing for our first startup. And we learned a ton. Now it's like we're much more aware of what's important, what to do. Because we have a tech background, and we were like, okay, the business doesn't need to be profitable. We just need a lot of users, and then we'll eventually get investments. But in the real world, it really doesn't work that way. Those are the unicorns, you know, that actually get invested. You need cash flow for any business to survive. So it was some hard lessons we took.
Yeah, and you probably learned those lessons that you learned are going to help you in the future like tenfold than if you would have just not acted on them and just kind of let the water take you, like, and the white waves ride the waves.
Yeah, Andrew, what was it, our third business, would you say, that we started? I know we had another one in between, but we didn't devote too much effort into it, like the crypto one.
Crypto is the third one, yeah.
Yeah, so I think it took us 3 to actually get one that has recurring revenue, since it's been operating almost 2 years now, and we're making money from it.
That's awesome. I have to ask a question. Do you guys have like haters, like in any aspect? Like when do people approach you, or are you guys like low key about your business? You don't have to really sell yourself because it's the business sells itself, if that makes sense. Like
For mining?
yeah, like for anything. Yeah. Do you guys get like people commenting at all, your friends, family, or like people from the internet?
Not for mining. I think Dalibor does a little bit because he posts things like, hey, I'm going to buy some Bitcoin, even though Bitcoin's crashing. So people will comment.
Oh my God.
But not because I don't think it's because he's mining.
I've lost friends due to like the decisions I've made with entrepreneurship, because I'm not going to specify names here for obvious reasons, but we just had different life goals, right? And then like as like I started moving up, they kind of stagnated, and they obviously think I did some cheating or I'm too good for them, but it's like, no, it's just like I'm just working hard and have other priorities versus you know, like I'm not going to drink at a bar every day at Friday night, you know. I'm working on the weekends. Like, you know, you understand what I mean, Matt?
Oh,
it's like
I totally agree.
Just different
I totally
lifestyles.
understand. It really is. People are just not ready for that though. They're really not ready to have the same person they've grown up with or they've been pals with for a couple of years just take off in a whole different direction. And it's not really a whole different direction. It's just the fact that they're staying in the same position and you're just steadily growing, because growth, like for most entrepreneurs, is very slow. and people don't realize how slow it is. It's just by the time your friends look back up, you're way up here because you were putting the work on a little bit extra, a little bit extra, a little bit extra. And that just creates haters because you came from the same place.
I remember when I bought the duplex downtown, people were like, how'd you get the money? You know, are you in selling drugs or stuff? Like, what the hell? No, I'm not.
Yeah. Yeah.
I actually had someone
I'm
ask me that. It's crazy. Like they
Yeah,
just don't
yeah.
get it.
No, absolutely not. They don't understand how much see that those are the people that just don't understand using other people's money. Like I've been taught my whole life, and trust me, like I'm going to be putting more money like on down payments than 5% when I'm older, because essentially we're probably going to have to.
That's an important discussion I have to make, because
Yeah.
I've hearing a lot of like gurus saying, you know, do 20% down. I'm like, if you're break even at 5% down, fucking do it. Like you're
Yeah.
crazy. You're using 20-to-1 leverage versus 5-to-1.
Yeah.
Do it.
Yeah.
Like
And
you're
then
gonna
you
get
could, yeah, and then you could pull like then you could have access to more homes down the road, like just losing the equity you built up.
yeah, it's
in
like
that,
you
in
will
that house.
build a ton of equity. Like I did it on my first two places. I'm building like 25 to $30,000 of equity every year from doing 5% down.
Wow.
It's like,
Yeah. That's
why not?
crazy.
You know,
Yeah.
if you
Yeah,
don't have the
really.
down payment, absolutely do it. Least amount of
Yeah.
cash you can spend to borrow money is always the
Yeah.
best option when it comes to
And
assets.
sometimes like
Sometimes,
if it doesn't, sometimes it won't make sense, but like
no.
just be logical. Like I said before, like make sure, like most people listen to what a guru has to say online about their situation. No, you know your situation better than they do. So I mean,
And yeah, just to be perfectly clear, entrepreneurship is a lonely and hard path to go down. Like
yeah.
me and Andrew, like you know how many nights we've been stressed out, or late nights we spend trying to strategize and do things. Like, and also like the co-founders you choose, people you work with. Sometimes you just don't work well with people. Like me and Andrew, we ran our third startup together for a reason,
Mhm.
because we know each other, we know how we work. Everyone has disagreements. We disagree on things even today. Like we had some disagreement, but it's like we can work over it. Like we know our
Mhm.
limitations and we play to our strengths. And that's very important. Because like, you know, people like Dan Crosby, they're kind of like an anomaly, right? Where they're able to do everything on their own. Most people, you don't have to have partners, or you don't have enough equity. So really choosing that partnership carefully is very important, but it's
Yeah.
necessary. You're going to grow way faster if you choose the right people.
Yeah. And we also keep in mind, like Dan started e-commerce. Like he put his time into that. That gave him the ability to go into real estate so aggressively, to
Yeah, but
as
like I'm
much as he
saying, like
did.
he started off on his own. That's very
Yeah.
rare. That's
Yeah.
very
Yeah.
hard to do.
Yeah. But a lot of people start off in e-commerce too. Like it's like if you're trying to build something that you could, like you guys, like with the mining, it's difficult. Like that is difficult. And like when you don't have like
Mining is
what's
difficult for technical reasons, because like if you're not in IT, if you're not in tech, it's very hard to get started. Like me and Andrew, we're in tech. We had a huge ramping up curve. Andrew, how difficult is it sometimes to get some of those mining issues resolved?
Well, because Dalibor and I are coders, but our business partner is a systems guy. Like he's a
okay.
what would you call it? Like, he's a
He's a hands-on IT person, like troubleshooting hardware.
yeah, like a
Okay.
networking guy. So he understood that. But despite the fact that Dalibor and I come from tech, we know lingo, we know how to build a PC, but not to that level. So it was easier for us than say just some guy off the street, but nothing like what's actually required to get mining started. But that's the bottleneck. It's just the technical
Mhm.
know-how. But once it starts, you don't have to go find customers. You just turn the stuff on, it makes money right away. Like immediately it makes money.
No
It's amazing.
customers. The only thing you care about is electricity costs, and basically keep making sure the equipment's running, and cheap warehousing. That's
Mhm.
basically the business. But that
Mhm.
technical barrier is a huge barrier to entry,
Mhm.
which is great for us, because now that we're in it, anyone who wants to get in, they're going to be stuck troubleshooting or figuring it out.
Gotcha. Yeah. Yeah. And like, I guess for you guys, my haters are different than like my process was different than like how you guys got to your like third startup. Like I'm only just starting in entrepreneurship, I guess. Like I've been doing it for about a year. And I'm not starting anything new. Like this entrepreneurship, I think entrepreneurship is like a misused word sometimes. Like I'm not starting anything new. I'm more self-employed right now. But you have to use the same tactics. I have to take this off. I can't even hear because there's noise canceling tactics that entrepreneurs use. So like yeah, like it's totally different. And like I said, like what I have to say could be totally different than your situation. And what you have to say could be totally different for the person watching it. It's like, know yourself to the point where you can take people's advice without like totally reforming your life, because that could ruin it too. Like I could have literally like lost my job, or like this could have failed and I could have screwed myself over just because I listened to Gary Vee say, screw your job, go all in. You don't need a job. You know what I
That's
mean?
terrible advice for most people because,
Yeah.
like you said, entrepreneurship moves slowly. We didn't get to this position now where we, in the mindset we are, if we didn't start, at the point that we are at right now. Like the person I was like a couple of years ago, 4 years ago, is not the person I am today. So I think that's important to realize, is like that, because we're programmed from society, especially in school, get a job, buy a house, get married, have kids, whatever, right? And it really takes deprogramming yourself from that. And it's a process. I can tell you, family will fight you for it. They won't understand what you're doing. Your friends won't understand what you're doing.
Yeah.
So that's why it's lonely. And a lot of people turn back from that. But once you get to the other side, everyone's kind of like, whoa, what happened? Right? Like,
yeah. And I have experience. So like no one understood, because I was going a year, like this has been like a year and some now. And it started off so slow, and they thought I was a total joke. My friends, I don't have as many friends now because they think, oh, you're in some pyramid scheme or some MLM or what else? Some scam, whatever it was.
That's what people tell me. It's like, when I'm mining crypto, you're supporting a scam, because most people think crypto is a scam generally, because they see all these people messaging them and trying to scam them money. That's the biggest problem with crypto right now.
Yeah, I know. And well, that's the same thing with me. And like, I can't, because I'm licensed, I can't say these companies that are doing these MLMs with life insurance and all this. But the problem with it is they're putting people in the wrong products to do what I'm supposed to be doing, that I'm licensed for. And that's so I can't stand it. Like that's a problem to me. But with that aside, like I've had a crazy journey where I wasn't making any money. And then all of a sudden I was making more in a month than my parents. And then they finally understood. But it was like, and they still don't understand. That's the thing. I thought, okay, I'm going to show them the money and it'll be all good. No, like people then will say whatever. It always changes. People will always have an opinion on you. And my family supports me. They just don't understand. But friends, they'll be like, yeah, you're like, you got here, but you're not enjoying your teenage years. Like when I was a teenager.
Absolutely.
And then I get to the point where they said that I need to go, and then they change their opinion again.
It's kind of the way I say it. Success breeds a lot of envy and jealousy, like my age, I'm 26. It's like I have a lot more things and achieved much more than people achieve in their lifetime already. And I'm not saying that to brag. I'm just saying that because my priorities are different.
Yeah.
And people, when they see that you're so much further ahead, they assume that you took some sort of shortcut. But it's like I didn't. Like Andrew knows me. For the past like 3 or 4 years, I've been busting my ass off, basically trying to get to the next level. Working nonstop, I would work my day job. I was working at a BMO at a bank. So I was working 60 hours a week there. I'd come home, work on a startup for an additional 20 hours. That was my week. And people are like, oh, you got lucky or something. What do you mean? What are you telling me? It's like, I've been working my ass off. Andrew, how hard was it? You have the best story so far out of all of us here.
Yeah, I just have a decent remote coding job. However, yeah, it's pretty I guess smooth usually. However, there are some times where you have to put in serious hours. I remember like 2-3 weeks ago, I pulled like 2 all-nighters in a row. I slept for like an hour each day, just like a quick cat nap, because stuff wasn't working. And then you have deadlines to meet, so sometimes you got to do what you got to do. But I still wouldn't go back to an office or do any other kind of work. But it's not always easy. Yeah,
I love that.
And if you're telling me, oh, it's not possible to make 6 figures, it is. It's relatively easy.
It is,
especially in now. A lot of, I would say, above average people make 6 figures now. It's not too hard. It used to be maybe like 20 years ago, much more difficult. But if you just put in a little bit of effort, you should be there.
What does 6 figures buy you? Like low 6 figures, it buys you what someone 10 years ago who was making 60 or 70K was making.
Yeah. 6 figures could be good. I mean, if you know where to put your money, because I think another like questionable thing I'm about to say people might hate you for this, but me for this, not you guys. I think making or where you put your money is, or how you manage your money is just as important how you make it. Like if you make, like these NBA players make millions of dollars a year, they don't know where to put that money unless they have a proper financial manager. But like some of them, like I think his name's Tyler Hero on the Miami Heat, he just blows his money.
Oh, wow.
He's making more than all of us combined, probably. I don't know about you guys because you guys are crypto activists making tons of bank. But he's, it's kind of sad because also people think, okay, well, doctor, oh, you hear doctor, oh, he's wealthy. But a lot of these guys are living paycheck to paycheck. And people don't realize that. Dentists, oh my goodness, the fees in dentistry, it's crazy. And people don't realize that. They think dentist, oh, he has money. No, he's driving a nice car because the cash flow is kind of there. He doesn't have anything coming out. He's living paycheck to paycheck, really.
Absolutely. And like you said, it takes financial literacy, like managing your money. Because, like, for example, like if you're a hockey player making 5 million a year, let's just use that as a number. You are sure as hell better be investing that money because you maybe only have like 8 to 10 years where you're going to make that much. After that, you're done.
Yeah.
So if you haven't invested your money well, you're going to be poor. And so, especially in those type of like super athletes, it's like if they don't invest or have sponsorships, not everyone's going to be a Tom Brady. Let's be honest. You could be the hardest working guy. You may never reach that level, but you will be wealthy if you manage your money right. You can have that mansion and you can eat your cake too, but you have to actually invest properly.
Yeah. At least do something. Just do something. Reach out to someone, please.
I was going to ask you this question, but so you've mentioned this life insurance. So let's say I buy 100K worth of life insurance from you, whatever product you're offering, your best product. Yeah. And let's say now I want to purchase this house and I want to use that 100K I just bought. How does the process work?
Literally, it's okay. This is going to sound this is where it comes. This is going to sound way too good to be true.
Okay.
So how I take out a policy loan is I go on my computer, I fill out a loan agreement, and I put in how much I want out of my policy, put down a down payment. If I was putting out a down payment, I haven't yet. And I would just literally send it through email, and my money would be in my bank within 2 to 3 days.
Nice. And basically, this loan applies to your principal. So let's say your insurance agreements appreciate at 6%, your loans at 4%. So would you still be making that 2% difference? Is that how it works?
Yeah.
Okay.
That's called, like, they call that financial arbitrage, because like it's right there. You do one little action and that creates 2%.
And is there ever a scenario that you've seen where the interest rate that you're earning on your investment is less than the loan amount?
No.
Has it historically ever happened?
Never. They've never missed a dividend in 175 plus years.
Okay.
Yeah, I don't want to go too far into like where I believe that it's the most stable investment just because how much the government backs it. Because it's backed by all these huge institutions that are literally too big to fail. And I've been learning about this concept for like 2+ years. And I've talked to like the millionaires that use this concept and the real estate investors that use it. And they're just so invested in the concept that it kind of like rubs off on me almost, where it's like just knowing the fact that the bank, how much money the banks own of this life insurance contracts. It's just kind of like, let's do what the banks do. Because when you're on that side of the spectrum, with what people are investing in, you're probably on the right side, because what the banks are doing, we just kind of replicate what the banks are doing. If that makes sense.
So how would I get started if I want to get one of these loans? Like, what's the first step?
You have to have a life insurance policy, but specifically designed life insurance policy.
Is it universal life and whole life?
Not universal life. Universal life does not work because it tracks the stock market. So you don't want to have something that's that could go down. Essentially, you want something that's guaranteed to grow, like a bank, an actual system that you could bank on. So it's dividend paying whole life insurance that you would want to use. that has its cash value, it has a cash value, and that is structured properly so you could pull out the majority or equity right away.
And how much are you able, what's the ratio you're able to pull out approximately?
So it goes up each year. So like it's kind of, it's different for everyone's situation, because obviously some people could put in $1 million in life insurance like right away, and some people obviously are making different incomes. But what I see is usually within the beginning, at the very beginning, it's like 50% you can only pull out. But like by the end of like year 2, it's like 85, and then so on and so forth. You can pull out all the way up to 100% of that equity inside that policy while using someone else's money. Like you're not pulling out, you're not actually using that money, right? You're just like a HELOC, home equity line of credit.
Interesting. I think we'll be in touch. I want to learn more about this.
That's exactly what Scott said. Every real estate guy always says, okay, I think we'll be in touch, because they understand the power of equity and leverage. So yeah.
Well, it's just because like I just like when I was studying like the fractional reserve banking, I realized how it works. I'm kind of like, I want to be in as much debt as possible that's making me money. That's what I've realized. The system works, right? And I don't care if I'm contributing to inflation. I want to contribute as much to inflation, because the more I contribute, that means the more wealthier I am compared to the rest of the people. It's a really weird system. Like,
no, it's clever. It's clever.
It's clever for certain people. Yes.
Yes, because assets inflate in inflationary times, and no one the middle class don't understand that.
Yeah. And speaking of it, we're not trashing the middle class. We're basically middle class here. So
yeah, we have the rich mindset though.
Yes, that's the best way of putting it.
So what's your business model? Oh, sorry, continue.
Yeah, go ahead. Who you're talking to me?
Of course. Yeah, what's your business model? How do you make money from doing this? Do you help them set up the life insurance policy, or do you help people?
So basically, I'm literally just the advisor. And so what will happen is they come to me with, like, let's say they have a business that's making money. They want more tax advantages and obviously want to buy things in that business. I just kind of do a needs analysis on their situation, set up the policy for them, structure it properly the way I've been taught and mentored how to do. And then they obviously we go through an application process to make sure they're insurable. Because let's be honest, like insurance is a privilege. Not everyone could do this, and this is not available for everyone in the world. Like it is a privilege if you're able to use this as a banking system. But if they're insurable, everything's good. We put in, we do the underwriting and all that. We send it off, and then it comes back. They pay, and then obviously they're able to fund that. They're able to go off and do their thing with the policy. And then if they have questions, I coach them like side by side for free, because that's kind of how it goes. That's what I want to do. That's how I run it. And I kind of like hold their hand in the process when they're kind of getting started. And then I get paid from the life insurance company. I get a cut almost out of that deal.
So you're
not from them.
Broker?
Yeah, insurance advisor.
Insurance advisor. Okay.
Yeah. So.
And are there certain insurance companies that you represent, or is it just one specific one?
No, I represent Canada Life, Equitable Life. I really only do the policies right now, like for my sake and for the client's sake with Equitable Life. I don't know how much I'm allowed to say on this online.
It's all good. Say how much you're allowed to.
Yeah. Just because infinite banking is looked at differently by different insurance companies. So some are more lenient than others, but we're starting to see that companies are starting to take a lot more initiative to get these policies better, more flexible to fund, for infinite banking purposes, if that makes sense.
Yeah.
I'm probably gonna get fired for saying no. I'm just kidding. Or my contract cut. No, it won't happen. But I wish the thing I wish, when I'm out of this, when I've kind of done my role here, in insurance, I can't wait to just talk about like the ins and outs of certain companies, like with other companies.
Oh man, hey, tell me about that. Me and Andrew, like we've been talking about things like once we no longer have to work day jobs, you'll see us talk about things that people will be like, what the heck are you guys talking about?
No, it's just the way things are running. Other like, and like I know insurance companies that are just absolute pyramid schemes. Like not like the Canadian. Like I'm talking about the actual brokerages like that run their systems, like legit pyramid scheme cult stuff. And
Oh yeah, I've been trying to. They've tried to recruit me before. I know there's Sun Life. I don't know. I guess they might be okay.
was it
It's
Sun Life? No, Sun Life is not. I'm not talking about the company. I'm talking about like these. I can't.
Is it Primerica?
Yeah, like okay, I could talk about Prime America because it's not around here. I don't think, right? It's in America, but
They do have some Primericas in Canada. So
Uh-oh.
think about that. Actually,
I'm
I was
cut.
at I was at a charity event a couple weeks ago, and someone had brought like a Primerica info board or whatever.
Yeah.
So they're definitely here. But
Okay,
yeah,
well,
I get you.
here I'll show you. Okay, can I share my screen real quick? Can I go on the whiteboard?
Go ahead.
Okay.
Let's see this. This will be fun.
Because I'm not saying any names.
All
Okay.
right.
Okay.
Just
I won't.
I'll narrate for you.
Honestly, guys, it's all good. I'm doing the world a service here right now for some
Okay.
people who are getting recruited to these cults.
I got tried. I was someone tried to recruit me to a pyramid scheme, but they were a former colleague of mine in high school. And I remember sitting in a room with them, and they're trying to sell me the Rich Dad Poor Dad book. I'm like, I read the book, it's great.
Yeah.
But not for what you're trying to sell me. That's a misinterpretation of the
You
book.
know why they did that? Because Robert Kiyosaki likes MLMs. Because the MLM model is a good model. But humans make it bad because they focus more on recruiting than educating on product knowledge. So if the product's trash, you're basically scamming everyone to join your culty pyramid scheme, and then you're kind of, yeah. I'm still, yeah. Is it working?
No, not. I don't see it. Dalibor, do you need to approve him or anything like that?
Let's.
It's okay. If it doesn't matter, guys, it's okay.
Okay.
But you get the point. I was gonna draw out like it's pretty funny, the model, because I got pitched and I was like, so this is how it works. They're like, why are you doing this? I'm like, because I kept asking, like, is this a pyramid scheme? And they're like, well, no, like, no. So they're like, well, what isn't a pyramid scheme? Your corporate job's not a pyramid scheme. I said, yeah, but I get paid an hour.
Yeah.
I get paid hourly. Like, yeah, the money still flows upwards, but I get paid hourly for the work that I do. I don't get paid for the work I do here, and you make the money.
Yeah.
Like, you can't make this stuff up.
The problem with pyramid schemes is like everyone up the food chain gets a cut of the bottom chain's work.
Mm-hmm.
That's I think inherently the problem. Versus a job, I'm set. I'm paid 50 grand a year. I'm paid 50 grand a year.
Yeah.
Not like they get a cut of like everything I've sold, kind of thing. That's I think the difference, in my opinion.
Yeah. Yeah.
So for one of these policies,
yeah.
For one of these policies, what's the monthly premium? Does it depend on the individual based off their age?
Yeah, exactly. It's totally depends on what they're comfortable. Because honestly, our company, or well, what I do and what I've been taught is to make sure the person's comfortable with funding it, because they can always open up more policies down the road, because that's what I'm going to be doing. And the actual concept, you want to flow all your money through these policies, so why rush it? Like it's really just, what are you comfortable with? It could be as low as $50 a month, like you're saving a savings plan, on steroids, obviously, because it's fully leverageable. But yeah, it could be 50,000 to the premiums of $1 million for a huge corporation, but like even more, like it could be the yeah.
So let me just give you a crazy scenario. So let's say instead of using my bank account, I just put all my money into this and just keep whatever I need for expenses, right? Obviously my account. So can I just use leverage and start investing? So I have two things growing at once.
Yeah, Yeah. So like the crazy thing you could do, I like, that's what I said in the beginning of the podcast. I want to do, by 2025, I want to use my bank account only for depository sake. So I get my policy loan, it gets deposited, I pay for expenses, I invest, I gift money, all using someone else's money, and then I pay back as we go with the income I generate with that money. That's the real way to do it. Like, that's pure banking function. That's what the banks do exactly. The banks don't take some money and the money that they make and buy. No, they take their money, buy assets, and then print more money and then give it away. Like they're never using their own money.
So it's like a cycle, right? So
Yeah.
just for everyone understanding, I make income, I put in life insurance policy, I borrow from the life insurance policy, buy real estate, I refinance the real estate, put more in insurance, but take more money out, buy more real estate.
Yeah.
And you can keep repeating that in a loop, right?
Yeah.
So,
Mhm.
so can we do a hypothetical? So say you're 30 on the dot and perfectly healthy, no health conditions, whatever, and you have a 6-figure job and you're willing to say pay $1,000 a month for your premium. What could you get?
Like, what do you like? How much money you like? It's like $1,000 a month. It just adds up because it's if you're paying $1,000 a month, it'd be $120. It would be $120,000 a year, right? So you would get the equity inside that policy because a portion of that goes to cash value, and then eventually that cash value, after year 3 to 4 to 5, will grow past how much money you're putting in. Does that make sense?
I think so.
Yeah. It's a pretty crazy, like, and like I said, like, it's not for everyone. Like, this is why I always go back when I'm talking to people about this. The person who can't be in control of their money, it's not good for. The person who spends every single day on things they don't need, it's not good for. It's for the people who are looking to build a fully functioning, leverageable asset, and eventually a huge banking system for their businesses, their real estate properties, their expenses, how they pay for things, and how they literally function in life. It's supposed to be a theory that takes over really for their entire life. And then it continues on to the next generation, because all that wealth they accumulate is transfer tax free, because you get that as a death benefit, because it's in the contract that they have to equal, your cash value has to equal. So by the time I go and actually end up passing away, my estate and or whoever my beneficiaries of the policy, because I'm going to have multiple beneficiaries, will literally be paid out millions of dollars of tax-free wealth. Meanwhile, the normal person will lose 50% because they don't know how to properly estate plan. So
yeah, these are great money conversations, like it's all just little things, right? Even if, like, let's say you don't want to be an entrepreneur. If you put away $100 into this policy for the rest of your life, that's a huge benefit you're giving to your like kids or your grandkids,
Yeah. And like, that's with and that's going, like, if you're only going to put your money in this life insurance, like, the thing I would say is put your money in the life insurance and then go invest in the S&P 500 for said a number of years. If you don't want to get into real estate,
I'd still say real estate, so you can do that investment loop. But not everyone's willing to do that, because real estate's not totally passive. There's people who want you can make it passive if you have property manager
with proper property managers, but human error. Like,
a lot of them are crap, especially if you don't have like a big apartment building, like, it's very hard to find good people.
Well, it's because all the real estate investors, why would the people who you want to hire as property managers are all doing it themselves?
Yeah, exactly.
Like you're not going to find, like, people who are really good at investing in real estate are going to invest in real estate. They're not just going to magically go say, you know what, I'm just going to manage this guy's rental for him. No, they're looking to scale their businesses, right?
Exactly. So. I think Andrew's interested in this loop. He likes this loop, don't you, Andrew?
I am. I just need to learn more about it. So why would someone choose term life insurance versus whole life insurance if whole life insurance has this great feature?
Because term insurance has been sought after for years, and there used to only be whole life insurance, right? There used to be, like, this is where before the banking systems were created and your bank account was created, there was whole life because people were dying and they needed somewhere to store their money. Then term assurance came along, and whole life got a bad rap. Like there was, because not everyone was using this as a banking function. This banking feature, like the whole using it as a bank account, wasn't established until like 1980s, like around there, like because Nelson Nash brought it to fruition. And he's like kind of the founder of the concept, because people have been using it to build wealth for years, but it got a bad rap just because they changed some tax features. Like there was like some weird tax feature. I'm not totally sure. But yeah, like that's mainly the reason. If that answers your question. There's so much more to it though. Like I wish I could tell you the exact reason. I could pull out my big IBC book right here and go through it with you. I had to study this thing front and back, and now I'm forgetting there's a specific reason for that though.
We'll probably schedule like some time with you.
I know. I'm not. I was just joking. Yeah.
So are you your own brokerage, or do you work for a brokerage?
Yeah. So like I'm sponsored. Like you have to be sponsored when you're joining anything into the financial industry in Canada. So I'm sponsored by so it's called 48 Financial. But the company that I work for right now is kind of like a group of independent advisors, and we kind of just work as a team. Yeah, so like we just kind of split deals when we need to split deals with each other. And I'm also being mentored, because when I came out of the Nelson Nash Institute, you need a mentor to make sure you're funding the deals properly for people and setting them up on the right track. So, yeah.
And then do you have to pay industry dues, kind of like what you're saying about dentistry and that kind of thing?
Like they're like to have your license and like to
like fees and all that.
Yeah, you have licensing fees in this industry, unfortunately, and I think that's like with really any industry. Maybe not with the banks. Not sure. You worked at BMO. I don't know if you're allowed to discuss that, but
I worked in tech, so I didn't really have that.
Okay. Oh yeah. So with any license, you do have to pay a fee, just so it's like regulated. And everything's really regulated in Canada. It's kind of getting sketchy, and I don't like it. Like they know everything, and I don't like that. But yeah, it is what it is.
Canada, the home of overregulation, as I like to call it.
The home of eventually communism. I'm just kidding.
Well, it could happen. It could happen.
It can happen anywhere. That's what I like to say.
I always like to talk about Venezuela. I think maybe 10, 15 years ago, it was the richest country in South America. Now it's the poorest, despite the fact that they have the largest oil reserve possibly in the world. And kids are eating out of garbage cans, and they're now using crypto because they don't trust their government issued currency.
Wow.
So you know how a lot of crypto proponents, they say that crypto is money. I don't think it's money yet. I think for Canada and most developed countries, it's still just an asset. It'll, appreciate, depreciate. But then when the situation really goes south, like in Venezuela, then it becomes money, because that's your only option rather than using fiat currency. So I don't think we're there yet, but we're heading towards that path.
I think you have to differentiate though, because Bitcoin is like a great store of value. I would say it's not great for transactional purposes because it's the network's kind of slow. That's why they're building the Lightning node around it, which is basically a layer on top of Bitcoin to make transactions go faster. I think Ethereum, or like a network that has utility functions that can make really low fees and really fast transactions, is what's needed. So that's where I see the differentiation. That I think Bitcoin will always have value, kind of like gold does. You know how gold doesn't really go up anymore in value, it goes up consistently. It doesn't shoot up. That's because Bitcoin, I think, has replaced it as a store of value. But Ethereum or these other coins, it's only what their utility offers. So that's where the lines kind of get blurred, as someone else could come up with something with better utility features. But an asset's an asset, it'll always have value. But a utility might not have value because there might be better utilities. That's the way
our money system, like our actual fiat dollars, are basically worthless, like in the grand scale of things. Like
money is nothing. Money is nothing.
I could pay for things, but like now that I understand like OPM and other people's money, it's like if like everyone wants to, I said this already, and I actually was with a guy this morning, and I said, money could be a seed to plant a tree to grow fruits that you can then eat or replant. Everyone's hoarding seeds right now. Everyone's hoarding seeds. You can't eat seeds. Like no one eats tree seeds. It's supposed to be a tool to build more wealth. And that's how the elites of our world and the people who make it and are wealthy, that's how they think of it. No one's eating seeds. And the people who are eating seeds hoard all of them in their bank account. Meanwhile, that $1 in 10 years could be worth thousands if you put it in the right place and you plant it properly.
But I really like some pumpkin seeds, you know. I'm just joking.
Sunflower seeds are good, man.
Yeah, I'm
They're
joking.
good in the summer.
But yeah, you're right. Like I don't view money as anything. I view it as worthless. To me, it's like assets or things that generate me money I want to own. I could care less how much money I have in the bank account. You know, I think I was watching a short with Grant Cardone where he's like, never keep cash in the bank, you know, get rid of it all. And then like to most people, like they view that as this guy's crazy. But to me,
they view it as like, oh, this guy just wants me to buy his course.
Yeah.
Like you don't keep your money. Yeah.
But from his perspective is like, you don't have to invest with me. Just don't invest in something, you know, anything.
Yeah.
Because I had that argument with someone today where they were saying, oh, a 4 or 5% GIC is a terrible investment. I'm like, yeah, but keeping your bank account is worse. And they're like, no, my money's there. Well, a GIC is guaranteed. I won't lose any money. You know, so I'm investing at 5%, inflation's at 8. I'm only losing 3 while you're losing 8. So tell me who's the real loser at the end.
Well, yeah. And that's also what people say. So when they're like, when I pitch them this infinite banking concept, they say, well, you're only making 6%. Why should I should just go put my money somewhere else? And I say, I don't care about the return. I care that I'm getting people's money for cheaper than anywhere else. Right. Because the universal life guys are going to come attacking me in this video because they're going to be like, because I always post about the 6%, because it's better than 0% in my bank account. But they're always like, well, where's your 12%? And I say, okay, well, go to retire and you go look at your cash value and it's down to $3,000 when you're supposed to have $30,000 or $40,000, $50,000 in there that you're able to leverage. Well, what happened to your 12% debt? I'd much rather have a guaranteed floor with the opportunity of more. That's my saying. Guaranteed floor with the opportunity of more.
The way I look at it is inflation's always going to be there. So for me, it's like as long as it grows at minimum with inflation, I think you're doing well compared to most people. And that's what people don't get because you're not losing anything. You're preserving your wealth, which is hard to do as well.
Like there's a whole bunch of different pathways to do this. Like you can pull out equity on a home. You can start a crazy cash flowing business that does very well. Like there's a whole bunch of ways to do it, but I like my guaranteed assets and that's why I do what I do. And I want to just grow from there. It's good to have a stable base before you go and put in a speculative crypto investment that could make you millions overnight. But it's nice to know that eventually I will get to where I want to go. And I have the opportunity to get there quicker. But I can always come back home and say, okay, at least I know I'm going to be a millionaire by retirement. Right?
Exactly. Well, I think you'll be a millionaire a lot sooner. Considering I think you're a couple of years younger than me and Andrew. But you'll be there. Like you'll be one day 30. You'll be like, whoa, like look at me now, you know? So
I don't like money's not the important thing to me. Like money is the tool.
It's the financial freedom I look forward to first. I think that's my first goal, right? It's like, I don't want to work at a day job. I want to have the liberty of saying, you know what? I don't like where I'm living. Let's pick up and leave, you know? I like, or the flexibility. It's like, no one can fire me. I'm my own boss, you know? Not because go ahead.
Mine is the endless adventuring I'm going to be able to do in different business ventures. Cause I love starting businesses. Like I mean, when I'm building out things, I like building things, but I don't necessarily like to be on the upkeep of those things. I like building the systems that get to where they want to go, but it'd be nice to have the capital always to form these businesses, get the people, like build the teams, and just have an endless, like every time I wake up, I could do something new.
You love tech startups then, I imagine. You'd love working
guys,
in tech.
talk to me. Talk to me. Yeah. I've always been interested, but like COVID screwed me up for a long time. Like I didn't like, I was just working well, keep in mind, I was also just out of high school. You
Yeah.
have to keep in mind, I didn't even get to graduate because of COVID. Like I did graduate, but didn't experience like the normal graduation. Like I started working a 9 to 5 in high school, like full time, 60 hours a week, because I thought, okay, I'm going to fund my real estate deal when I'm 22 or 21. So we'll see what happens next year, right? We'll see if that
Do you
comes
have
true.
any properties, or are you looking right now?
I'm looking, like I've been looking steadily, but obviously I'm moving away. I'm going to try to get started up there. I'm not going to say where I'm moving to on camera, just so I don't want people knowing, but let's just say where I'm going is very fresh. The real estate markets are very fresh, and I have a great team up there. I have a lawyer set up there. I have an actual real estate investor up there that's like around our age, your age. I'm just gonna say our age because we're kind of close in the grand scheme of things.
Kind of, yeah.
Do you know how old I am?
20.
Yeah, I'm 20. Yeah.
You're 6 years younger than me, so.
Yeah. I mean, we'll both be on yachts by the time we're 50.
I'm hoping sooner.
Yes. Let's go.
I don't want to be an old man on a yacht, you know?
Okay. Okay, good. I also, yeah, like, and I will say outlandish things like, I mean, I would have gone sooner, but some people don't want to hear that. Like some people are like, oh, this guy's crazy. Like,
Well, I moved to Toronto. People are calling me crazy. It's so expensive there. It's done wonders for me moving there. Looking at it retrospectively.
Yeah, that's why I'm moving away where I'm going now. We could talk off camera, but I really am excited just because all the new, like the people I know and the people I'm going to meet, new network, fresh network. It's like that people don't know who I was before. I don't have to worry about haters. And if there are haters, who cares? Like, I don't know.
I'm gonna tell you one thing. There's always gonna be haters in your life, no matter what you do. So as someone who's climbing like the social ladder and just success, you're gonna have to just forget about them, just put them in the back burner, because they're not helping you improve your goals. They just want to impede you. They want to keep you at their level, right?
Yeah.
So just filter them out, do your own thing, find new people that share your goals. That's honestly what we've been doing, and it's working out pretty well.
You did 22K in crypto in 1 month just by mining.
No, one
Pretty
day.
Well. We never realized it, though. That's the thing, right? It was just had that trend stayed for the month, then we would have made that much. But it was only like for
but it was there. It was scaling there. Like it's possible, and it might even come back. Like the right. Do you think that will ever happen again? Like
probably.
Yeah,
it's very cyclical, right? That was like at the peak of the market.
Yeah, and we're like the next market, I bet, is going to be even more insane because, like I said before, like assets appreciate during inflation, and we printed $7 trillion. So that money has to go somewhere.
And we're still printing. Let's not forget that.
And we're still printing. Yes. Yeah, that's crazy. 2 years, 7 trill.
I remember when I told someone, they're like, "Oh, they stopped printing money." I'm like, they never stop printing money. I don't know what you're talking about.
When you go and take out a mortgage, they print money.
Yeah, that's it.
Yeah.
Like we've slowed down considerably because the banks are jacking up interest rates, and the central bank they want to slow down inflation by stopping credit growth. But they'll only be able to stop in the short term before they go back to the status quo.
Yes. Like our monetary system is inflationary.
Yeah.
It's always going to create inflation. And this has been happening since Caesar was in Rome, when he used to clip the gold dollar, melt it down, make more coins.
Andrew talks about this all the time.
Yeah.
It happened there. Happened in China when they started the fractional reserve banking system there, and it's happening in crypto too through secondary layers.
So that's actually a good point, and we should talk about it. So Ethereum. You've heard of Ethereum, right?
Yeah. I know it. Yeah, I got a good basis of everything you guys are saying. I'm just not going to act like an expert like you guys.
Got it. And then there's a layer on top of it called Polygon. So I argue there's already inflation in crypto because Polygon represents Ethereum. So when you have a representation of something else, if they start inflating and creating more Polygon, that means for the same quantity of Ethereum, we have more Polygon. So that means that's inflation right there.
Yeah, that is inflation. Yeah.
And when I've told that to people, I got attacked for this, actually. Someone messaged me, like, you don't understand. I'm like, that's inflation.
Yeah.
Because
it's an extent, hear me out. So it's an extended version of basically Ethereum. So there's more coins in circulation than it was supposed to be, only of that certain amount of coin.
Exactly.
Yeah.
And you're just hoping
That's
that,
inflation.
yeah.
You have more assets chasing fewer goods, kind
Yeah.
of like,
Just like at
and
the
if-
bank,
yeah.
just like at the bank, you're hoping there's no run, right? So there's no bank run, there's no crypto run, because then that's when people realize that there's a disconnect between what they say is there and what they actually have in the vault.
Facts. Yeah. That's
And,
good.
and when people tell me like inflation can't happen in crypto, I'm like, no, you're not thinking this through. There is assets that you invest in. Even the Lightning node, I was telling to people that's also inflationary because Lightning node is built on top of Bitcoin and it represents a certain amount of Bitcoin. So if they now create more Bitcoin in the Lightning node than exists in an actual Bitcoin, what does that mean? Inflation, right?
Yeah. Well, even if like with the Polygon and Ethereum, if Polygon and Ethereum become way more tangible, you're able to buy more. Like, and people are using Polygon the same way they're using Ethereum, and they're literally manipulated like they're like each other. Then that's literally inflation. You can't. So I don't get why people are attacking you for that.
It's because they assume that just because you invest in a crypto product, they're escaping inflation. But like, let me give you an example. Every time we have a new block in crypto, a new block is just like a series of transactions. They create 2 Ethereum. So that means it doesn't matter. Ethereum by itself is also inflationary because there's just more and more supply every time.
Yeah, like so they can create more Ethereum.
Yep.
So you're not escaping. So the whole I didn't know that, to be honest. I thought the whole point of crypto was to
certain assets.
Bitcoin is non-inflationary, except for because of the Lightning node.
Yeah.
The Lightning node is the inflationary, I would argue, part potentially of Bitcoin.
Yeah, but like at the same time, it's not like there's different levels to inflation. There's like actually printing more Bitcoin or minting more Bitcoin in the system, or like having like a runoff coin of Bitcoin. Like obviously the thing that's going to do more damage is if they print more or mint more Bitcoin, right?
Which
Then
they can't do.
Yeah. So it's not as bad as if they can print Ethereum or I keep saying print like it's money, but
they are basically printing it.
yeah. Minting.
Yeah,
it's literally the same thing at that point.
And most networks function that way, by the way, in crypto. Most of them are proof of stake and they constantly increase the supply of coin that they have.
Bitcoin is pure, but I think inflation is just human nature. So this is I guess a food example, but I was at the store the other day and I noticed I used to always get like frozen blueberries. It's usually like, it used to be $4 for a 600 gram good size bag. Now it's $6 for a 400 gram bag. So it's inflation in that the farm has the same amount of blueberries, but now they have more bags of them. So it's just like human nature to just try to like give you less and charge you the same or more. Like I'm not I don't use marijuana, but I know that happens in drugs where they just try to skim a little bit off each bag or whatever, just so you can make more bags. It's just human nature just to give you less each time if they can.
Yeah. It's the illusion of wealth. It's the illusion that you have more that is actually just destroying your financial situation.
And
good point though, Andrew. Good point.
And as we've seen, I think every generation, like at least like our parents and like I think our generation is gonna be the first one less well off than our parents. I actually think that because I think home ownership is gone and everyone's loaded with student debt, which our parents didn't have to face.
Okay, but here's the thing though. There's gonna be people like us, and it sounds bad, but we're gonna be like the elites compared. Like the middle class is the gap between the poor and the rich is just like this every single day, more and more. So the people who are doing what the wealthy are doing are going to be growing this way, the right way. And the people who are staying stagnant, doing what the middle class do, are going to be growing this way. It's actually working against them just to be doing what the middle class are doing. So what they're educating us in school and why we're getting so many grants to go to school is so they can make us that middle class mindset, because the poor are going to be poor anyways because they spend everything. The middle class are going to be poor because they go with the flow and they just say, okay, I've been taught this. I'm just going to save my money, let it depreciate. I'm going to go to school, get a nice paying job that actually just makes me break even when I go to retire because inflation eats away my salary. Like it's not accounting. Like the salaries aren't catching up to the rate of inflation. They're not increasing at the same rate. So you just see the biggest growing divide. We'll literally see the biggest growing divide in our lifetime. Like, I guarantee, like, there's going to be poverty, and then there's going to be people driving hypercars.
Yeah,
everywhere.
I think the argument was everyone's going to be driving Teslas or Lamborghinis, or they're not going to be driving at all. That's what's going to happen.
Yeah, there you go. Yeah, sadly, and I mean, the people that's also another thing. Like, the people who hate on the gurus are still doing what, like, the wealthy are doing, and the people who hate on the people who are trying to make it right now, it's way better than just staying there and going and wasting your time partying, drinking at the bar Friday night with the guys. I'm not saying you can't do that, but make sure you're properly putting your money in the right places, so you're not going to be left behind when like inflation reaches crazy high rates.
Yeah, and like another thing, like, obviously this is an uncomfortable truth for most people, is that the inflation rate that they post is like a lie too. If you look at the actual definition, like 50 years ago, it's increase in money supply. What is the definition now? Oh, these metrics, this we're going to compare, used car prices, rent prices, mortgage. That's not inflation. Like, let's stick with a simple definition.
Yeah.
No, Peter Schiff explains that pretty well.
Yeah.
So, like, the institution I went to, we've learned all about Austrian economics, the Chicago School of Economics, and the Keynesian School of Economics. There's not one school that teaches Austrian economics. That's what we need to be teaching. Mm-hmm. We only teach Keynesian economics, where if the economy is going down, we print more money. That's like the worst thing you could do, because it just fuels bigger boom bust cycles. Yeah. So there's literally no point to do it. Like, it's actually worse for us. And the Austrian school teaches that you stay out of it. You have a certain amount in the money supply, and you leave the economy to do its thing, because it's naturally going to do this. Instead of Keynesians, let's print money, and then it goes down. And
then we jack up interest rates, and then it goes crashing down.
Exactly.
What are your thoughts? What's going on right now, though? I think that's important. Do you think we're heading for a big crash?
So 3 out of 4 times the real estate market crashes with the stock market, and I don't know if the real estate market's going to crash, because it also is relative to the location and the supply and demand of that area.
And I mean, just in general, right? Like, real estate obviously has different factors.
Yeah, like, I think I don't know how big the crash is going to be. I honestly, after what happened in COVID, when no one could predict the market, but I'm telling you right now, when we were it was March 2020, we hit a small recession like this, and then all of a sudden it kept going. It just shows you how much control the central banks have of the economy. So I don't know the actual answer, because we might go for another 15 years of prosperity, or we might hit the biggest recession we've ever seen. But eventually, when it comes down, we will see the biggest recession of our lifetime, because as long as it keeps building up artificially, it's going to crash a lot heavier artificially. So that's my thoughts.
I mean, if we have extremely high inflation, that could balance out how much impact it would have to asset prices, though.
Yeah,
right.
That's true.
Because if we have wages going up 5 to 10% for the next 5 years, less than inflation, doesn't matter. If you earn 25% more, these asset prices can't really go down.
Yeah. Well, that'll help out demand, or like, if people could buy more things, that might help. But
they can't buy more things. They'll just keep the asset prices up, because more people have more in terms of dollars spending, right? You haven't earned anything, but you have more dollars.
Oh, like the appearance of wealth.
Yeah.
Or okay. Well, that's what's happening now, right?
Yeah, exactly.
Like, inflation's just eating their dollar, and they're making more, but they're not actually making more. That could continue, right?
Yeah, like for example, I used to think being a millionaire meant, a whole lot. Now it doesn't mean anything anymore, because you could be a millionaire on one house. A millionaire.
Yeah.
No. Like, I think the equivalent's maybe like 5 million now.
Yeah. No, I think my goal is to it's never to have I have $1 million. I want to just have enough assets that fuel my lifestyle, which honestly, I'm a dynamic person. I'm changing every day. I don't know. Maybe I want a super yacht one day. we'll work towards that. I don't know, but you're totally right. Like $1 million is not going to get to where you want to go anymore. Like if you're a millionaire right now, and it's just like, oh yeah, I made $1 million. Even making $1 million in 1 year, if you have big corporations, the prices of owning a door-to-door business that's actually brick and mortar, it's like inflation's eating you up, and then like taxes, like, and tax laws are only getting worse because the government in Canada, they don't support entrepreneurs, and that's
Ask
another
Andrew
thing.
about the taxes here. It's ridiculous. He
Yeah,
was studying in law school about it.
oh yeah, like it's actually disgusting that, like, I don't want to get too political, but why aren't we supporting entrepreneurs? We need entrepreneurs, and we're going to be screwing ourselves over in the end because we need entrepreneurs to support our economy in Canada. At least America's better at it, but they're still heading the same way.
How don't you understand? You know, it's all these wealthy landlords and greedy landlords and like entrepreneurs that are price gouging people. You don't get it, Matt.
Yeah, but you're on the right side though, right?
So you said you're going back to school?
I didn't go to school yet.
Oh, you're
I
going
haven't.
to.
Yeah. I'm going to be going to school.
Is it for
But
finance related or?
Business. I'm going for business because I also am playing volleyball there. It's only for 2 years. It's nothing crazy.
Nice.
I'm going. Yeah, so I'm just gonna play some volleyball. I'm still working on my book of business, building that up. And then I'm also doing I have a gym like technician job at the college. So it'll be a learning experience. I won't have time to procrastinate. It's gonna be awesome. Always gonna be full.
My advice to most people who are 18 want to be entrepreneurs is don't go to school. It might sound counterintuitive, but unless you're going for a profession that requires it, don't do it, because you're going to end up with debt that you won't be able to pay back in most professions. Like if you study a liberal arts degree, you're wasting your time.
I would not recommend going to school, even though I'm going because I will regret not being able to play volleyball, because I'm not going to be able to play volleyball for in Canada. I'm not able to walk on a volleyball court professionally and try out. I can't get to that level unless I play some form of varsity. And I also I like it. And I'm also going to miss out on I can't tell my kids, yeah, college is useless. I want to be able to say, wow, college is stupid. You're not going.
Me and Andrew went, and I think both of us could say, we didn't learn anything. Like Andrew, it was all test banks, right? For us.
Yeah.
Yeah. Well, we learned how to survive. So we learned.
Yeah. And I'm excited. Like, don't get me wrong. Like college could be a blast, but I'm not there to waste time. Like I'm there to build my character. I'm there to learn time management. I'm there to see what it's all about. So then I literally can say one day, at least I did it and I know what it's about. And even if I drop out, at least I tried.
And to have some fun. Let's not throw that in. You have to have some fun when you're in college. That's the point of it.
Yeah. We'll see. I'm not going into that mentality because I know I'll screw it over somehow if I say, okay, I'm going to have fun.
You don't say that, but make sure to have some, because it's probably one of the only few times you can do stuff and not have major consequences,
Yeah. Unless, but you can also grind through and not go to college, and you could have no consequences because you're wealthy.
Yeah. So there's pros and cons to both.
Yeah.
Because if you look at most people who are in their 30s and 40s, they say, oh, university was my best years. Why? Because they could have done what they wanted to do, right?
Yeah, exactly. Yeah. They sacrifice that for, it's kind of funny because people are like, oh yeah, Matt, you're not having fun in your teens. You weren't having fun. You're going to waste all your 20s and you're going to regret it. Meanwhile, I'm like, well, I'm going to have more free time because I did sacrifice my 20s. I have more energy in my 20s to do the things that build crazy businesses and create crazy opportunity for when I'm 30. And if I do it properly, I'm going to be more fit because I have the drive to do everything.
And like, it's like when you're an entrepreneur or something, there's more stress on your body, right? So you have to work out, you have to do things, because like I've noticed, like sometimes I fall into habits where I'm eating not the healthiest food. It's like, because I'm stressed.
So I swear my hair's gone like a little bit more. But yeah, what were you saying? You're stress eating?
Sometimes you stress eat and do things that you're not supposed to. So it's like you really need to develop a routine of working out, sleeping regularly. Otherwise, you're gonna fall
100%.
apart.
Yeah, you're like, not everyone's like Elon Musk. And
Yeah.
he even said to himself, no one should work that hard. There's a reason why he's at the top right now. And it's because that guy has a work ethic that he has no source of strength. He doesn't need it. He's just like, I'm gonna build a rocket. We're gonna go to Mars. And we're gonna do that. And not everyone can do that. So it's all relative to your situation and what you can do. But don't limit yourself. Don't use that as an excuse. Push yourself.
And don't let other people put limits on you. I think that's also important. People say, "Oh, you're not good enough to do that." How do you know?
Yeah.
If you haven't tried it, how
Yeah.
do you know you're not capable of doing it?
Yeah, and that's also like in the whole school thing. I want to see if I'm actually capable of school and managing my time, because honestly, I'm terrible at time management right now. I'm not good at all. And I think that's something that school teaches you. You have to learn how to survive, even doing things you don't want to do. School is something I hate doing, and I have an opportunity to actually go to school, get some of it paid for, obviously, and then just see where it goes. Like, try it.
Well, I can tell you, you're further ahead than me and Andrew were at your age. Like, I had no
Really?
idea what I was doing back then. No, like I only started waking up basically when I started working my first job after university. I had no idea, right? Because
Yeah.
I just grew up. I didn't even know about entrepreneurship. I watched on TV these people, like Shark Tank. I'm like,
Mhm.
oh, like I don't know if I don't. They're successful because of
They got a
have
good
rich
job.
parents or something.
Or they got, yeah.
And then I realized when I started talking to people, I'm like, no, that's not necessarily true.
Yeah. Well, there's also the people who do like the Saudi money. Like, there are people with rich parents, but they
most
usually fall
entrepreneur-
off.
Yeah, most entrepreneurs are like that though.
Yeah. Like they come from wealthy
No, they
parents.
don't come
No,
from wealth.
no, because entrepreneurship is not something that it's not something that everyone can do. It's like you're born with it. And a lot of people just don't have like
I
what it
disagree
takes.
with that. It's born. I think it's a learned skill. It's not one that you're born with. You can be lucky and strike a dart right away, perfect
Yeah.
business, but that usually doesn't
No,
happen.
No, I mean like the mindset to
Oh,
fail
yeah.
over and over again. Like,
Yeah.
not the actual action. I mean the ability. Most people just don't have the emotional intelligence to know that failure is a good thing. And that also might be because they take creativity out of the school system at such an early age, where you're just kind of put in, okay, what do you want to do when you grow up?
Well, I think the bigger problem with the school system is if you fail, you're done, right? Like most of the time, you have to retake the course, or you fall extremely behind, you're kind of shunned. Versus it should be, okay, you failed, let's figure out why you failed, and let's, figure out how you can learn this. So I think the school system is set up in a way where failure is like, you're basically screwed for life, right? Imagine you did one thing in school. Let's say you had a fight at school with another student. You're suspended for 20 days, and now everyone shuns you at school. Because that should be looked at, or it should be looked at, hey, I made a mistake, I learned my lesson, I was punished, let's bring me back. But no, that stigma remains, right? So it's like you can't make a mistake basically in the school system.
Yeah, and like that's like a part of me. I was thinking about it, like it was like a late night thought. I'm like, imagine if I got a teaching degree and I went and I was like the guy who changed like the kids' pathways, because I'm like, don't listen to the school system, don't go to school, do this instead. I'm just teaching them IBC. I'm teaching the infinite banking concept. I'm teaching them how to pull equity out of homes. I'm teaching them.
But this is another thing I've realized, actually. If everyone did what we were doing, the system would collapse.
Yeah, and that's something I thought about, but I didn't actually like it actually would. Do you think so?
Well, think about this. If everyone was living extremely frugally, there'd be no spending. So, and every business would lose significant revenue, so they have to cut back, right? And then if everyone was investing and leveraging, think how much inflation that would cause.
Yeah, but that's if everyone's being frugal with their money. Like, imagine if we were fueling the economy in a different way, where everyone's starting their own business, everyone's got their own like niche, everyone's doing something.
But then it'd be even harder to succeed as a business because there's infinitely more competition, right?
Yeah. But that's how it used to be, though. Like, there's also a lot less people, smaller towns, no cities, but like it used to be, you had your craft, you had your business, you set up shop. That was you. That's what you did for the rest of your life. And everyone really, it wasn't prosperous by any means. Don't get me wrong. Like it was very difficult to do, but that was just the norm back then. And everyone had that system. Now it's like, you're either a slave to the system or the person who enslaves these people. not on
Unfortunately,
purpose,
yeah.
not on purpose, but just because people don't have the risk, what is it called, the ability to take risks like entrepreneurs do.
Risk
Really.
appetite.
Yeah, risk. It's called something. Risk. No, I don't. It'll come. It'll come. But
Okay. But
you
you're
could say
you're
risk
totally right
appetite.
about taking a risk. I remember when I bought my duplex, I was
Yeah.
uneasy about it. I'm like, oh, I'm taking a bunch of this money, because when you're transitioning different mindsets, it's like I don't feel comfortable with this. And I realized I'm not paying for this. Why am I so worried about it? If a tenant doesn't pay, I have to wait 6 months to get them out. But it's a lesson learned. Now I know, like, I'm gonna
Do a
filter my
better
tenants
job.
better. Yeah.
Yeah. Yeah.
It's not game
And
over ever in entrepreneurship. You just get
mhm.
setbacks, and then you're gonna get huge like bonuses. Things could
Yeah,
happen.
because you do it quicker though.
Yeah.
Like every time I learn, I do it quicker. Like if like, let's say today you guys asked me a question about IBC and I totally messed up. Well, the one, like the other, like the person who just went to school and only knew that route where if you fail, you're done. That would be a total collapse of that passion. Like they just cut it off. Me, if I were to like fumble a whole bunch about IBC to you, I would sit down for the rest of the night, write down every question you guys ask me, and make sure next time I'm able to answer them like in full perfection. And then the next time you guys go to ask me, I'm going to be that much better, like almost tenfold, with that much more confidence to talk to you guys. That's the difference. And that's like the difference between like a failing business. If your business fails, well, the next time you go to start, if you don't stop, it's going to be a lot better for you.
Exactly. I remember when I was learning how to code, and during my first job, I'd code all day at work, come home, work on a project and code. I did this for about a year and a half. And I became such a proficient coder that people who were there like 5 years were like, yo, how'd you get this good? Everyone thought I was
Yeah.
like a genius, but I wasn't. I was just
Yeah.
working super hard.
It was trial and error, right? Like,
Yeah, I was just putting my head at it. Andrew, you see me then, right? I was just coding all the time. That's the only thing I did.
Mhm.
And it pays off. So,
mhm.
and I master that skill. But you have to put in like, I think it's like 10,000 hours to master
Yeah,
anything.
master.
And I'm not saying I'm the best coder in the world, but I'm so proficient that it's now recognized, right?
Yeah, and with what I'm doing right now, I'm not a master. I'm not a professional. Like I'm someone who does it, and I'm also someone who could help you do it too. That's really what I am. I'm more of a leader in this industry. I will, once I like, think about this. If I had the ability to purchase 2 more houses than everyone else, if they're only buying 1 a year, people are going to be like, how are you doing this?
Yeah.
Well, then I'm more of a leader than a salesman, because I'm showing them the exact strategy that I'm doing, but I'm also profiting off that. So that's how I view it. It's like someone's got to sell it, because if not everyone has the ability to sell, also, like they don't have the perspective and the ability to do it. But I think it's a really cool career path for me, because it's right up. I could talk to entrepreneurs. Like right now, I wouldn't be here if it wasn't for learning IBC and preaching about it. So it's taken over my life in a good way. And I started banking on it because of it. Like that's my podcast. Because obviously banking on it, I'm banking on my policies. And like everyone I talk to, it helps them. It helps them in a good way. So yeah, I don't even know where I was going with that. I got so fired up.
And sometimes it happens. You get really excited.
Yeah. That's usually how I run off of, though. Just pure ambition, man. Just pure ambition.
Hey, I was telling Andrew, like, I want that Lambo, like when I see other people have it, I'm like, I want it. That's what,
Yeah.
Not, and for me, if people are like, oh, you just want it for showing off. No, it's like, I want it because I've known I've achieved X in my life, because I don't want, I could go out and buy one right now, like, but I'd be spending a huge chunk of my net worth. What's the point? Like, I'm basically gonna have this car I can't afford versus, go ahead.
I have to go. What were you gonna say? Versus, you finish first before I go.
Versus me having like a net worth of 10 20 million, and I buy this car, it doesn't affect anything.
Okay, so here's the thing. There's ROI on your investments, but there's like also like false ROI, but it is ROI at the same time. So let's say if I'm doing $500,000 in sales this year,
Okay.
right? I drive a Mini Cooper, for your information. People don't view me as a wealthy guy, but I'm just a really good salesman.
Mhm.
So what happens? I went out and bought a Lamborghini Aventador and put M Branch Financial Services on the back, and it became a unofficial lead generation like machine. And then I actually make more money because I bought that Lamborghini.
Well, that's part of your brand at that point. That right? That's different.
Yeah.
I'm talking about strictly for pleasure or your own
Pleasure.
personal
Okay.
use.
Yeah. Yeah.
That's like where I would draw the line. But for example, if I'm like
But
a YouTube personality and a Lambo gets me hundreds of thousands more ad revenue, I'm gonna do it, right?
yeah,
But
like, so you're agreeing though with me, because
yeah,
I always
absolutely.
see guys say, don't buy the Lambo, don't buy the nice car, don't do this. And it kind of influences me in a negative way, because I feel like if I were to get one, it would like indirectly affect how much I'm actually credible, how successful I am. That's just because the society we live in. I'm not saying you can't do it without it, but
Yeah, but I would also say you have to evaluate, right? If I get a Mercedes or an Audi, is it going to have a
yeah,
similar effect, or is the Lamborghini going to put me over the top, right? It
yeah,
for
yeah,
me, you
yeah,
have to calculate that ROI for me to make
yeah,
sense. I don't care. I could be driving a rust bucket. I really
yeah,
don't
yeah,
care as long as what is optimal for me at that point in
yeah,
time to generate me more money. Because like
yeah,
I'm not against spending money to make money. I think you have to. Anyone who
yeah.
tries to save their way to prosperity is impossible.
Yeah, you're going to actually save yourself into poverty, not prosperity.
Yeah. You used to
Yeah.
be able to back in like
Yeah.
the 50s or 60s when there was the gold standard, but that doesn't
Yeah.
exist anymore. We don't live in that world.
Yeah. Yeah. I'm glad that you guys know that though. Like, I'm really happy that Andrew and you both talked about um the clipping the dollar and like the history behind inflation, because a lot of people are like running around, they're like, well, my groceries are too, or they're appreciating, I can't afford anything because my groceries, but it's actually because we're printing money.
Yeah.
That's the actual reason
Well,
behind it.
that's what Peter Schiff says, and it is a great like I don't watch him anymore, but I used to. He basically says the reason the government changed the inflation index is because
Hmm.
now they have people to blame. You can blame the greedy landlords for raising rent. You can blame the grocery stores for raising prices on food, etc. You have just a list of people to blame now versus blaming the source.
Hmm. Hmm.
Because if you say
So
printing money is the cause, everyone knows who's to blame.
yeah, 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 but no one's gonna. There's no way you could shut down that thing, because they built a such a great system and such a convenient system for people that it's like the source of their problems and also the reason why they're able to do things so much differently, right?
Exactly.
So you know how we started off, how it's all about doing what the wealthy are doing.
Mhm.
So that's exactly what I'm doing. I'm doing the whole banking system, but on a privatized level inside an insurance company. It's literally what it is. Hey,
There he is. So you're basically running a Ponzi scheme, right? That's what people are gonna say.
is that what it is?
Oh yeah, looks like it.
What's a Ponzi scheme? Again,
So
I don't know the exact definition.
so it's basically when people invest money into something. So let's
Hmm.
say you have a bond you're selling. So
Hmm.
you get investors to buy the bond, but your bond doesn't generate enough returns to pay your investors back. So you rely on constantly new investors coming in and paying off the
Oh,
existing investors with the new investors' money.
It's
I'm
like
not running
the
yeah. Well,
it's
yeah,
like the Evergrande system in China, the real
Yeah.
estate
oh yeah, yeah, yeah.
collapse.
That's a Ponzi scheme, yes.
That is. But I feel like there's probably a lot of hidden Ponzi schemes out there.
Absolutely. Oh
Yeah.
yeah. Well, I'm just
But
saying what people are going to say to you. That's a Ponzi scheme, but it's not because they're actually you're giving them money to invest in things, which is different.
yeah, like it's the money that comes from it is not from the investors investing in it. It's, well, the money
The
that's,
the borrowed money is,
yeah, like, because,
technically, yeah.
well, okay, there's a big pool of money
Hmm.
and they take that pool of money, invest in assets.
Yeah,
That the money they make on those assets help grow the pool of money to then
exactly.
go pay back dividends. But I can see where people can, you know what, people are going to be skeptical about literally
Always.
everything.
Oh, I remember when I started crypto mining, my parents were like super skeptical about it. And when they seen the money come in, they're like, wait, what? Everyone
Yeah.
changes when money comes
I,
in.
I know. And I had the same experience with family, like with what I was doing, because it went from 0 to 100 real quick. Let's just
Yeah.
say that. And like, that's why I'm taking the ability, like, that's why I've kind of been given back the ability to go to college, because I was never going to go. I'm like, you know what? Like, I'm going to regret not going to college, like, because just for the experience. So I'm like, let me make my money. Let me go really hard this summer, just crush life insurance, sales in IBC, and then go to college and do the same thing, learn time management, network with people, sell more policies. Sounds bad. I'm a go-getter though. And the more people I have to talk to, the more money I make. Because it's like literally,
yeah. Two pieces of advice I would give you in college: try to
Yeah.
find like-minded people. You won't find many, but there will be, because they could be some of your friends for a lifetime. Like me and Andrew, we met in university. We're
See?
still friends. Yeah.
And you guys told me not to go. You guys are giving advice to our viewers to say, don't go to college. It could
Well-
be very beneficial.
Don't go for the education, because you won't get one unless you're going for STEM. You're not gonna learn anything.
Yeah.
But you need to find
Yeah, man.
like-minded people there. That's, I think, the important thing. There isn't many, but if you're going to go anyways, definitely focus on that.
As soon as you get there, look up, ask around, see if you can find test banks for your classes, which are just databases of multiple choice questions. You'd be surprised how much of business school is multiple choice.
Yeah. Well, I've done multiple courses already, and I feel like I can find the answers online everywhere. Right. Okay. Well, what is that? What is the website?
Or
Or
for multiple choice questions?
Yeah.
Oh, okay, so I can't say for every school, but the school Dalibor and I went to, I'd say 80% of the courses, except for finance and accounting, the ones that actually have some math, everything else is just multiple choice theory. And
Really?
And what happened was students somehow get a hold of the master database for the questions, and that just gets circulated around. People will sell it. People will sell it to each other. And if you can get that, so say your midterm has 100 multiple choice questions, the database will have 10 times that usually. But if you have the time, say the weeks before, whenever you get it, to go over that 1,000 questions, really know it, then you're going to ace these exams, no problem. Like, you have to actually get some wrong just so the teacher doesn't think you're cheating.
Hey, we're telling you this because we're out of it and it's a scam, but we can't get in trouble for it. It's like we didn't use them, but we were aware of them.
Yes.
For anyone
But
who knows.
I know school is like literally the biggest scam, like, that's out to date right now.
It's a degree mill. That's the way I call it.
I'm not going for that. Like, I hope you guys know, like, I'm not making this is not a bad choice. Like, I know a lot of people will think in entrepreneurship that this is a terrible choice. It's actually, I'm going to make it sure. I feel like I'm doing something that will make my future self proud. Like, it's going to be like, I'm glad that you did that. Or it's going to be like, wow, you wasted that much time. It might go either or, but we'll see.
It doesn't matter if it goes either way. Retrospectively, you're going to be 22, right, when you're out.
Yeah,
So you still have a long time ahead of you.
Yeah, exactly. And hopefully a real estate or property or two under my belt by then, if things go well.
I mean, if you're in Windsor's kind of expensive now, but if you're in a cheaper market.
I am in a cheaper market up there.
Okay.
Like probably 25% cheaper compared to, like, on average, like, just because where the location is.
Yeah, like I know you told me where you're going. I won't mention it on the podcast since you don't want to, but you might not see as much appreciation as you would in Windsor, but you're aware of the trade-off. I'm
not looking for appreciation. I'm looking for cash flow.
Well, appreciation allows you to grow cash flow a lot quicker. So because you're able to refinance and get the other property. So
you're right.
Appreciation is very important as well. Cash. A lot of people who only focus on cash flow don't get the appreciation, which
that's good to know. That's good to know. Yeah.
Because think about it, like, you're making $1,000 a month, let's say, in cash flow, but the property doesn't appreciate for a decade. Well, it's like, I can't refinance it, right? I have to wait a long time. But if I'm making $500 on this property, it appreciates 20% in 5 years. Yeah, now I can refinance it. It goes down to $200 a month, but not another one who cash flows for 500. So
yeah, it's apparently supposed to boom though, from the investors who I've talked to. Okay, so apparently what's going to happen is it's going to take off, much like a location near it that is oversaturated. So that's what I'm looking into. And also, if I own 1 or 2 properties there, it's not a huge deal. It's not a totally big deal, but it is. I mean, even just for the experience of buying a home, couple of rentals, having people in there, it's also going to help me, and also give me credibility when I want more money to buy real estate down
Oh,
the road.
absolutely. Yeah.
Yeah.
Like you learn a lot by renting. Like my first property was a single family home,
Mm-hmm.
which I'm kind of glad I did because I appreciated the most out of everything.
Yeah.
But yeah, you learn a lot just dealing with tenants, getting payments on time, communicating. There's a lot of things to it, right?
Mm-hmm.
That little things that you don't realize.
Mm-hmm. Mm-hmm.
So you'll have a lot of
Mm-hmm.
fun doing it. I can tell you that for sure.
Yeah, we'll definitely be in touch too. Like, cause, yeah, and I'd love to hop on another call like this and just chat, see what's going on with the crypto and all that. Because
Absolutely.
it's interesting. It's amazing what can happen when you network with like-minded individuals.
Yeah, and everyone's doing their own thing. Like a buddy of mine, he's like into like watch collecting. He's like flipping watches all the time. And I'm
Mhm.
like, yeah, it's cool. It's like I really don't know much about watches. I know Andrew, one of Andrew's friends is like a expert on watches almost. He knows every little detail about it. But it's
Yeah.
like something, maybe I want to, buy a really nice watch and wear it,
Mhm.
but I don't know how much I want to be, flipping them all the time.
Yeah. It's not the total passive route, right?
No, not
Yeah.
yet. Not yet, at least. But I
Yeah.
know I was reading something. It's like a Rolex, you buy one new, it's already worth more money than you paid for. I'm like, that's crazy.
Yeah, I know, because they have so much stock,
Yeah.
but they only give so much access to that limited stock. I
So
don't
I'm
know.
like,
It's a monopoly there. Like it is.
I've become a watch expert through osmosis from just talking to my buddy. But it is nice to buy something that doesn't depreciate right off the lot, so to speak, right?
Mhm.
Normally anything you buy other than like precious metals or like hard assets, it's worth less as soon as you bought it, right? But
Mhm.
not houses generally, and right now not for cars, surprisingly, because
I know.
right, like
That.
I could.
that will last. Let's be clear about that.
This is true, but for watches, at least for the foreseeable future, you buy a Rolex Submariner for 10K retail, 10 to 12 or whatever it is now. You can flip it right away the same day for double. I do have a nice watch that's it's owned by Rolex. It's called Tudor. It's one of Rolex's sub brands, and I bought it and I could sell it for $1,000 more than I paid for it. Even if well, brand new, but if I say I wear it every day, I could still sell it for the same price that I bought it for.
That's
So
sweet. Yeah, my cars out appreciated the stock market this year. It's okay though.
It used to be weird, right? Because in cars, you have to really pick carefully which cars are going to appreciate. Now it's like it doesn't matter what you buy. You can buy that, Nissan Altima. It's going to appreciate.
Yeah, it's pretty crazy. It's
hybrid.
yeah, and like also, I don't know how much longer we have, but the whole Tesla, or not Tesla, but banning diesel trucks and diesel cars by like 2026, and they want to go all electric, and obviously America's probably not going to be too happy with that.
We'll see how that goes. That's all I'll
I'd love
say.
to see that. Might start a World War III. I'm not even joking.
Well, I can tell you the Ford F-150 Lightning, which is Ford's electric truck. It's terrible.
Yeah.
It got 80 in a test, a real life test, towing a travel trailer, probably
Mhm.
nice to an average size travel trailer. It only got 80 miles on a full charge. And it's a
That's
$70,000 truck.
Yeah.
Amazing.
There's no value in that. There's literally no value for like the amount you have to pay.
And you know what's funny?
to get
That
access
truck
to
to
it.
like actual people who use the trucks for work, they're like, that's worthless. Like you're never
Literally,
gonna
that's
buy
what.
that.
Yeah. Exactly.
Because
Yeah.
I want to get a truck eventually down the road. And when I look at stuff like that, that one's like not even in consideration anymore. Because
Mhm.
like I'm
Yeah.
planning to actually use it for things I need.
Mm-hmm.
Where's
Yeah.
Ford get off releasing something like that? If he tested that, I just would have scrapped it.
Yeah, I wouldn't have released. You know what it is? I think
It's
they
'cause
wanted to be,
it's
they
like-
wanted to be the first one out with a pickup. That's it.
Exactly. And I was just about to go there. It's like the moon race between America and Russia. Like they had to produce that truck, or else like someone else would have come and swooped in. And then because now everyone's looking at, because it could just be a dummy. Like it could be like, okay, well, next one. Now we're all interested because let's see how trash this is going to be. But it might be really good. Might be a whole plan.
But it's hard to get a battery to actually withstand that pulling power, right? Because we've had diesel and gas trucks for like 100 years at this point.
Yeah. Mhm.
electric cars when we started, like a few years, like a decade ago. So to get the power that we need to actually pull the loads that a pickup carries, that ain't gonna happen anytime soon.
Probably not. No, I mean, Elon Musk is working on it, but
Let me
yeah,
just tell you, like the
yeah,
Cybertruck has been delayed for how many years? There is a reason for that.
yeah,
And if
and the semi trucks like the Neo, there's a stock like Neo. Tesla was trying to come up with one. Like I haven't seen any of the progress pictures of those trucks.
like I said, there's a reason. Like they can't get the power needed in the battery long enough to last. Because what
Mhm.
good is the battery pulling 80 kilometers? It's like I might as well
Yeah.
not even get that.
Especially with those big transport trucks, right? Like,
Yeah.
mhm.
So it'll be interesting couple of years ahead when it comes to that, because not to get too political again, but a lot of these policies that they're implementing are causing things to get more expensive.
Mhm.
But unless wages catch up to it, there will be problems. That's all I can say about that.
My prediction is that Nikola will create the first commercial ready
That scam
18
company
wheeler.
we invested in, Andrew.
I'm just kidding.
I'm still in. I'm still in that. No, sorry, I'm out of that. Maybe I'm thinking of. Wait, what is Nikola?
Nikola was like
A Ponzi scheme.
yeah.
Was
Remember
it?
that? Yeah. So they were a competitor supposedly to Tesla, like an electric truck company, and they
I
supposedly
heard
had
about this.
and they supposedly had a running truck, but they just rolled it down a hill to make it seem like it was moving. For investors, and we invested in it because I was looking at it. I'm like,
Yeah, yeah.
look, if they can figure out a semi truck and they're further ahead than everyone else, yeah, I want in.
Nikola.
And then it turned out to be a
Yeah.
scam. Like, you know what? Screw this.
Yeah.
But
I'll
they're
take this L.
I heard about that though. I've heard about because it was like Nikola and it was like Tesla's direct competitor is Nikola
Yeah.
Tesla.
Yeah.
they're publicly traded, and the CEO was worth billions after the IPO via SPAC. And but if you look into his history, apparently he was like a known fraudster.
Yeah, and there's a lot of people at the top who will commit a ton of fraud.
But it was crazy because, like, why did investors invest in this guy? That's even like, did they not do their due diligence? Did no one call out that this truck was just rolling down a hill?
Well, they
Like,
probably did, but they got like people buy the hype more than they
Yeah.
buy the knowledge, right? Like they buy into the hype.
And
You
like
know?
you said, me and Andrew got burned on this. What other investments did we get burned on? What was that, like volatility trading index, VIX or something?
I don't remember. I didn't lose a lot, but gold. I lost money on gold because of
Yeah.
Peter Schiff.
So like that's why me and Andrew tried the stock market and we kept losing money. So we're just like, screw this. We just exited it. Like the only thing I invest in truly in the stock market or keep around is dividend paying stocks, because they give me a 6%, like you said, 6% return, and they appreciate over time.
Yeah.
So it's slow and steady. It's kind of like your life insurance policy.
Yeah. Well, yeah, if you're getting it literally is, it's just not leverageable.
Depends how large your portfolio is, but yeah, generally you're right.
Yeah, like and it's also not guaranteed.
Canadian banks have a history of paying out for every single time for the past like 80 or 60 years. So it's kind of like,
Do you know
life
why?
insurance. Why?
Because life insurance is. It's 'cause
There
life
you go.
insurance.
But that's my point, is like the
Yeah.
degree of risk is very
Yeah.
low that you won't get paid.
I love banks. I love banks. And people are like, bro, you're literally destroying the central bank. No, actually, I'm supporting them because people have more access to more money to invest in goods, which actually helps out the economy.
Yeah.
Like, I don't know. There's always a way around it, but yeah. Yeah.
Well, anyways, thank you for coming on the show. I think we had a great conversation.
Oh yeah, it was beautiful.
Yeah.
Great time.
We'll
My
come
pleasure.
on yours next time.
Yeah, yes, for sure. Make sure to. We'll do that next week, okay?
Sure.
It's gonna be awesome.
That's
It's gonna
good.
be awesome. Thanks, guys.
Take care.
See ya.